In the world of high finance, we're all taught that assets should be visible, impressive, right? But what if the smartest play is the one nobody even sees coming? Today, we're going to unpack a really counterintuitive strategy straight out of Silicon Valley. And believe it or not, it all starts with the humble minivan.
I love this quote. It just gets right to the heart of the strategy. The whole goal is to choose assets that completely subvert expectations, to deliberately confuse the valet. And this isn't about being eccentric for the sake of it. No, this is a calculated move. It signals a completely different understanding of value and a new way to manage your public profile.
So, this brings us to our first big idea, the status symbol paradox. We're going to explore why some of the wealthiest people out there are actively choosing things that seem to contradict traditional displays of success. It's a paradox for sure, but it has a very logical and, for us, a very profitable answer. Okay, let's see this paradox in practice. On one side, you've got the perceived symbol of success, a $90,000 luxury SUV, shiny, big, impressive. And on the other side, the strategic reality for a surprising number of top executives, a Toyota Sienna. Now, this isn't about taste. This is a cold, hard, calculated financial and security decision.
And let's be really clear about something. This is not about being frugal. It's not about pinching pennies. It's a sophisticated capital reallocation. Think about it. That status budget, the premium you pay just for the public signal, is being purposefully redirected. It's moved towards assets with a much higher, though less visible, return, personal security, and just unmatched utility.
So this way of thinking actually has a name. It's a defined approach people call the stealth wealth strategy. And right at its core is a specific decision-making model called the Metris strategy. Let's break down what that really means.
So the Metris strategy isn't just a vague idea. It's a formal framework for how you acquire assets, and the core principle, it's actually pretty simple. You evaluate every single purchase based on its internal utility, what it does for you, and how much it contributes to your anonymity, not the external status it projects to the world.
This whole strategy is really built on 4 core principles. First, you maximize practical utility. How useful is this thing really? Second, you actively minimize your public profile. Third, you sidestep all that social judgment. And fourth, and this is huge, you reduce your security risks. Each of these principles treats your public visibility as a liability that needs to be managed, not a status you need to broadcast.
All right, now let's put on our CFO hats. We're going to quantify the value proposition here and break this whole decision down into a pure return on investment calculation. Let's run the numbers.
And the hard numbers, well, they really tell the story, don't they? You've got a $40,000 price difference right off the bat and a more than 100% improvement in fuel efficiency. But the most critical metric on this table, the one that any executive should be focused on, is the last one, the implied status tax. That's the huge premium you're paying just for a public signal, a tax with zero tangible ROI.
But the real return goes way beyond the sticker price. The first major pillar of this strategy is active risk mitigation. By choosing to be anonymous, you're essentially buying an enhanced personal security detail without paying a single guard.
Think about it. An inconspicuous vehicle is an active risk management tool. It's basically camouflage. You immediately lower your profile as a target for physical threats, and you also mitigate all sorts of social and professional risks. You get to operate without broadcasting your net worth, and that gives you an incredible amount of privacy and control. Okay, so that's risk. The second big return isn't something you can measure in dollars. It's all about pure utility. This is where the focus shifts to the practical, day-to-day value an asset delivers, a metric that, let's be honest, often gets totally ignored in the chase for status.
This number right here, 35+ miles per gallon, it's more than just saving a few bucks on gas. It represents a much broader principle of efficiency. It's a quantifiable return on being practical that you get every single time you drive. It's a constant little reminder of a smart, efficient choice. So the crucial point here is that value itself is being redefined. It's no longer coming from what an asset says about you to other people. Instead, all the value is derived from what that asset does for you, the comfort, the efficiency, the experience on the inside, and the utility it provides for your family and your life. Which, of course, brings us to the fundamental question that this entire strategy is built to answer. If the ROI isn't in public admiration or the shiny status symbol, then where is it? And this all builds to a new, much more sophisticated definition of ROI. It's one that prioritizes these intangible assets, like security and privacy, way above the tangible displays of wealth. So here's the strategic shift in your thinking.
An asset is no longer just a public signal. It becomes a source of private utility. The goal shifts from maximizing visibility to maintaining a low profile. In short, the status symbol becomes a strategic tool. And this is the bottom line, isn't it? In this framework, the highest form of luxury isn't a physical object. It's not the leather seats, it's not the chrome badge. It is the intangible, absolutely invaluable assets of personal security and the peace of mind that can only come from being anonymous. So I'll leave you with this question to think about. In an age of complete overexposure, what is your greatest asset? What you own or what you successfully hide? This strategy suggests the real advantage, the real wealth, lies in what people don't even know you have.